So this, this program is really a gift, and the IRS actually, Bonnie, came out with this week. The IRS shares 7 warning signs on ERC claims that may be incorrect. Urges businesses to revisit eligibility. Solve issues now before March 22nd, which is the Voluntary Disclosure Program deadline. The 7 suspicious signs are too many quarters being claimed, qualifying for all quarters is uncommon. This could be a sign of an incorrect claim. So all quarters, you're getting all quarters. That's a
red flag.
Mm-hmm. Yeah. I could see maybe a pharmacy, maybe, if getting a quarter or two or something like that. But all quarters, that's going to be a flag. Government orders that don't qualify. So those are orders that are not eligible orders. OSHA rules, you got to wash your hands or whatever. Those are not government orders. Of course, the government order has to partially suspend the business, and you have to show that the suspension had a more than nominal impact to the pharmacy. So that could be, that's where it's really going to get tough to.
That's that gray area.
Lane where you qualify, because you have to use hard numbers to show you've had a more than nominal impact.
And Scotty, again, I know this is like episode 5 on ERTC, but a lot of these third parties, I've seen some of these that come from their documentation that they send along with it is really just the government order or the order from that local whatever. That's it. There's no detail about the exact reason for the shutdown.
Oh, exactly. Yeah, I mean,
that's not enough.
I saw a government order where here in North Carolina, one had us review what a third party put together, and the government order said that the business was required to shut down, and that was not
even the case.
Not true. So they had just probably third party took a government order snip from another ERTC claim they did and just plopped it into this pharmacy. And so, yeah. Wrong calculations, too many employees. I have seen some calculation issues because you have PPP that comes into play. You can't do PPP and ERC on the same way.
No double dipping. Yep.
I've seen some of that. Supply chain issues is a red flag. Let's see. Businesses claim an ERC for too much of a tax period. So that's pretty much saying you only claim the ERC for the period you were partially suspended. So, for example, we did a restaurant. We have a local restaurant we helped out with. And we did the RC, but we did the RC through a certain middle of the month date where we could justify the partial suspension.
Right.
And we didn't take that whole quarter. So you see what I'm saying? Like you only take where you were eligible for.
What makes sense. Yeah. Yeah.
I have not seen a third party do that. They just take the whole quarter.
The whole thing. Yep.
Of course, there's some where the business didn't pay wages or didn't exist. They're getting some claims on that. And then the promoters are saying there's nothing to lose. Everybody's doing it. That's another warning sign. So you have the voluntary disclosure program out there, y'all. Just, if it's something you feel like you need to explore, check it out. Just type in IRS voluntary disclosure program in Google search and it'll pop right up.